Let's start with the gold prices, which have remained steady, trading just below that 6-week below mark, trading near that 1250. We have seen a breach of that coming in as well, 0.5% down in the European markets at this point in time. The investors have remained reluctant ahead of the US Fed Reserve policy meeting, where another cut to its bond buying stimulus could be announced. Also, the Chinese demand for the bullion witnessed a slowdown, which could add further pressure on prices, and that's what the gold prices are reacting to at this point. The crude prices in the meanwhile have seen some strength come back as the Brent is back above 106 a barrel. Chances of a potential conflict diminished after Iran halted its sensitive nuclear operations under a preliminary deal. But the prospects of the OPEC members pumping more supplies still remain far away, and that is limiting the upside. On your screens you have the crude oil prices nearly 0.25% up for NYMEX, and the Brent prices also are trading steady. Let's get in then. Kishore Narne, he's Associate Director, Head Commodity and Currency at Motilal Oswal. Also joining us is Vijay Bhamwani, who's author and CEO at BSPL India. Vijay, hi to you first. And how do you look at the kind of strength that we have seen in the European markets come back for the energy space, especially the Brent prices gaining nearly 1.5% high?
Manisha, prima facie it looks like a blip on the screen, and this is likely to persist for a few trading sessions at best, because the overhang of supply at higher levels remains in place. This is more of a corrective rally than a complete trend reversal in crude oil prices. On the other hand, natural gas is a different animal altogether. At 255 odd levels, there's a nice little base formation from where I expect the bulls to keep lending support in case prices decline from, and the upside potential on this counter is up to 285 to maybe even 290. So the risk reward ratio on natural gas is that of buy on declines, and crude is that of sell on rallies.
Kishore, what's your sense really coming in for this space? Because there has been quite a sharp turnaround, as Vijay was pointing out, in crude prices and natural gas. We have seen a big jump up coming in. Does it look sustainable, and how would you want to trade?
I think crude can sustain another couple of dollars, probably 95, 95.5 kind of levels can be looked at in short term. I think even domestic markets, I would still like to go and buy crude with 5,840 as a stop loss and 5,950 as a target for domestic prices. But natural gas is something which I don't feel it will be sustainable at higher levels. So any rallies towards 267 kind of level should be seen as selling opportunities for a good downside towards 258 kind of levels.
Well, the gold and silver prices definitely have seen some decline coming in, especially after the strength that the US dollar seems to be having, and not so much buying in the last couple of sessions from Asia as well. Kishore, how are you looking at the gold and silver prices now, especially for silver, where 45,000 continues to be a resistance really?
Yeah, I think 45,000 may not be really acting as a resistance at this point of time, but certainly that range bound sideways move is within a much larger range of around 1,500 to 2,000 rupees range has been taking place in silver market. But I don't think the sustainability of silver above 46,000 is really possible. So until unless that happens, I don't still go out and buy for positional purposes, but I still believe that the strength remains in silver for targets close to 45,200, 250 levels. But until unless this 46,000 is broken above, the positional buy calls cannot be initiated in silver.
Vijay, what's your sense? Because we have come a long way from 31st December when the gold prices were trading at a 6-month lows of 1180, from that to plus 1260 kind of levels, and now at these. How are you reading the trend on charts, and what kind of levels would you watch?
Manisha, this rally in the absolute near term doesn't look sustainable, whether it's gold or silver. Where silver is concerned, I maintain my level of 42,500, where I would initiate my next tranche of buying in the physical space. Where gold is concerned, unless gold really breaks out above the 29,350 levels, even momentum players are unlikely to make too much money even on intraday basis. And if you're talking about serious positional traders, I think they'll wait for 29,675 to maybe 29,800, depending on the risk appetite. So those levels are far, far away from here. At best, you might take a punt, and the best thing forward would be to get out on the same trading session. Here, if you're keeping long positions overnight, you're exposing your flanks and leaving your trading book absolutely fraught to high risk. So I would basically not want to go long on gold or silver at current prices. Deep declines, possibly yes, but then I'm biased towards silver in the physical delivery segment rather than the leverage space.
Fair point. The silver price is on your screens, 1.5% decline there as well. So below $20 is how we are trading onto that one. But Vijay, one thing that you were forecasting long on has been nickel and aluminum, and nickel prices are above 900 and holding quite firmly there. What kind of further leg gains, and do you see much more gains coming in from these current levels?
Manisha, fundamentally or technically speaking, the rally in nickel is unfounded. Having said that, the rally still has legs. The market is going up because of the realignment of positions of the bulls and bears, and at this point in time, I think the bears have got their trading strategy wrong and the bulls are making them pay a price for it. As long as levels are concerned, I would not be surprised to see 918 to 924 levels on nickel. Although I think there is only a marginal probability of that happening. At that level, if at all you see 920 plus levels, I think the bulls will find it a challenging effort to keep prices rising at that trajectory which you have seen in the last couple of trading sessions. In case of a decline from there, I think 868 to 870 is the level what I would see at. Where aluminium is concerned, I talked about a primary breakout above the